Cool. So pretty much we're gonna be putting everything all together from the market direction, from trading view to the market direction to determining the structure, support and resistance, and then we'll be just doing our outlooks and seeing how it all plays out. And we'll do it across all markets. So we'll start with Forex, then we'll do maybe a stock or two, and then we'll do maybe like one or two cryptos. We'll just kind of play around. We'll go into the replay mode and see if our analysis is correct, honestly. And that's purely relying on technicals. This is what this is for, technical analysis, not fundamental. So obviously when we go back into replay mode, we're not going to know any announcement that may come out depending on what market we're looking at. So we're completely unbiased. I'm going to pick a random point in time. And yeah, we'll just put it together and see how everything works. Right? Okay. And let's go into replay mode. Make this like this so we can see the direction. And let's go to 2023. How about that? Let's start. There we are, February 10th. Go on the daily. All right, y'all. So we're on the daily time frame. 2023 is right here. I'm gonna mark it off. Friday the 30th. Market open Tuesday, January 3rd. We're in the new year. Let's do this. We're on the daily time frame. Okay, and what are we looking at? So we see that we are now in an uptrend. When you're on the higher time frame, you don't have to look so far back because it covers a lot of data. So the most recent aspect since October now, across 2 quarters, or 1 quarter, I should say, we've been in a clear uptrend, right? Let me zoom in a little bit. All right. Okay, so immediately looking to the left a little bit, we see we have, let's go like this. So we see we have some type of resistance that's up here at this 0.95 thousand level. Yeah, about 95,200. We're gonna 94,500. Geez. So we're gonna mark that off right here. Yep, 95,000. Okay, and then we're gonna draw in our resistance. Okay, so now we see we have a what? It is like almost a year apart, but we do have a double top here. We have an M pattern. Okay, if we went down to the weekly time frame, it'd look better. You can see that right here, weekly. See, there we go. And now the weekly kind of cheated, so you have to be careful with when you go up to the higher time frame, because we were down to the day, we didn't see how the week finished. But as you can see, the week is starting to push bullish, so we have a clear M pattern on the weekly time frame. Okay, but let's go back down to the daily. See, now it fully hasn't formed yet. So we have 1, 2. Okay. Okay, we're gonna let this play out. So we have a pattern. We had a clear uptrend, but we did see that we have an M pattern forming on the weekly time frame, showing it's a bearish. It could be a bearish trend overall, or bearish reversal. So this is just like a short position tool to get a visual. So we're in a short position. We're gonna take a short position for our pattern, and we would base our direction for down here, and we would probably aim for a move lower. Now there's a bunch of different support points where price could stop at and continue bullish if it so chooses to, or to switch bullish. One support being right here. Okay, and this level is at the 91,000 level, as we can see to the right. So first sign of resistance of support could be right here. We can see a move like this happen. Looking to the left. Probably do something like that. This is a little point where price was coming down reverse. And then we already have this point here, which would line up with this point if we were to draw one there. So let's see. So overall, you'd look for a move. You look for about a 690, 700 pip move. You know, we're not going to get into the specifics of the trade. We're just looking for the direction, right? So we want this to see if we can go lower. So let's see. Okay, we're breaking below. We've broken below the support. We respected this at first, but overall price broke below. Let me zoom in a bit. Price broke below, broke above, broke back below. We're battling with this 0.91 thousand level, right? So now we're we're just waiting to see if price will respect it either as a support or as a resistance. And it looks like it's forming as a resistance. And if we went down to the lower time frames, we'd probably see some more patterns forming here. So we're on the 4 hour now. And then not really any patterns, but we can see that we have, rejection. So we would have like it's an ugly triple top where you say you have 1, 2, 3. So let's see if this can ultimately break lower. Okay, looks like it's breaking lower. Okay, it's really fighting with that 91,000 level, but overall it respected it. Let me add it in here and we'll see how it respected it to the T. These key levels do not lie. They will always guide you. Let's zoom in a little bit. You see this here? Look at all these wicks right here to the key level. I didn't touch on this. I'll get into this in the next, as we get a little bit more advanced in my next series on just fine tuning, just a little bit more advanced things to look at. But we have wicking here, which shows exhaustion shows bullish exhaustion. 1, 2, 3, 4, and then look at how price literally wicks into 91,000, but closes below it by 1 or 2 points, right? That's insane. Then this candle opened, tried to push super high, keep going bullish, failed, closed below, and ultimately closed down here. Pushed down here, closed here, and then these candles finished the way. Sorry, I can't talk. This is the first video of the morning. Or it's 2 o'clock, but first video over the last couple days. So, ultimately our direction, we've hit this level. Let's continue though. Okay, so at this point now we are at, so now we just broke below 89,000. Broke below 89,000. We broke below 89,000. This was our ultimate target of 87.3. And looking to the left, it looks like we ultimately bottomed out at 86,000. So let's just see if we can return to this level. Oops. Oh, hold on. Do that first. Yeah, let's just see if we could return to this 86,000 point, right? Okay, so we see price came back up. So this shows that we have a strong support here. Price tapped it one time and it took off. Okay. So this is a valid support that was formed. A little bit messy, but we do have 88,000 a little above it, 87 right below. Okay. So let's just see. Oh, we have 88. I didn't even mark 88. So we have 88 right here. We got 88,000 right there. So let's just see. Okay, it's super messy, boom, and we tapped into 86,000. Beautiful analysis. Remember, I just chose this randomly. But you see, with the higher time frames, patterns, understanding your key levels, it was that simple. Not every time it's going to be like that, of course. This is all probability wise. Again, the same way, we got the analysis. We did our quick analysis, simple analysis, and we determined that we would like to be on the bearish side of this market, and it paid off. Is the same way. There was also a slight chance that it could have reversed at any one of these points. It could have went right here and kept going higher, went right here and kept going higher. But the overall trend of being bearish prevailed. Now this whole move, this was on February 1st of 2023. It took 239 days for roughly 800 pips. That's a nice chunk. 238 days, February to September. So it took some time, but it ultimately, the overall trend, overall direction was right. Now, if just looking at this on the weekly now, what do we see? What do we see we have setting up? We have a W forming right here. Let's get rid of this. Let's get rid of this. Get rid of all this. Okay, we'll keep this one. No, we'll get rid of that too. Now we see we have a W here. And a little bit advanced, but as we see this W forming, remember our candlestick video? It was shooting star right here. This is a very strong sign. It's at the end of a downtrend. Very strong sign that we are due to take off. It could, on the lower time frame, make another W in itself here before taking off. But on the weekly, long term, if you're looking to invest in, I don't know, let's say if you wanted to hold some money in a bank in Australia over here, and ultimately you would look for a move from here. Let's say let's put our money in at 87 cents. Right? Put your money in at 87 cents, and we would look to ride this back up to 95 for the first target. The second target would be ultimately up here to that $1 mark. So let's just see if we will change direction now or not. Okay, let's draw our little support, 86,000. All right, let's see. Okay, we're pushing up higher. We're pushing up higher. We're crossing into 2024 now. Okay, looks like we have a higher low that just formed. If we can make a higher high, then we're bullish. Okay, we've broken above. We're now bullish. Higher low just formed. Right, guys? So we have our initial downtrend from 2021. So for 2 years, we were bearish. Or for 3 years, sorry, because it wasn't until we crossed into 2024 just about. So we had our lower high, lower low, about a double top here pretty much, but we'll say equal high. We had an M pattern form on the daily time frame where it was equal because of the wicks. And then we had a, sorry, I'm saying this, let me restate that. We had a lower high, a lower low, then we had a higher high showing signs of a break of structure. On the daily time frame, we had a double top that we identified, especially with the weekly. Then we looked at the weekly and it looked a little bit more crisp, where we took our position for a sell. And the market then followed over the next 6, 7, 8 months, where it got to our ultimate target of this previous low. We looked at the weekly. We saw a W pattern forming at the end of a bearish trend, which is a sign of a reversal back to a bullish trend. We took our position bullish, and now we are holding, and now we are waiting to see a confirmation of that bullish trend. by seeing a higher high, a higher low, a higher high, a higher low. Now we have a change of structure. Ultimately, though, well, it is the weekly. I want to say ultimately, I wouldn't be fully long term bullish until we break this previous major high. Because what can also happen is this can also do this as a retracement, make a triple top, and then do the same thing, right? So that's why you kind of want, you don't want to jump ahead of yourself and over predict. You kind of just want to react, let the market tell you what it's doing. We can push higher. I think it's a good chance, but ultimately we won't know until we break 95,000. So let's just see if I'll leave this marked up and let's just see if this is what we get. Okay, we don't have a higher low that formed. And oh wow, all right. And we're in present time. Dang. So I guess we won't know. What a mystery. Where will we be going? So since this is what we just got, and we'll just leave this out of it. Interesting, interesting, interesting. Retracement. Then we shifted back to a higher, to another higher level. 1, 2, boom. So it looks like we're kind of in between. We might be overall bearish still. We're still waiting for confirmation, but let me delete this now. I would like to see. I'd like to see. So because we have this, I like to see if we respected this 91,000 level here. Since this was a low that formed, we'd have to see if we respect that or break above it, because it could just be getting messy, maybe a little sideways. But it looks like ultimately, this is what I'm starting to see here. So we have a support right there. We have 91,000. That's right here. I should have went further back in time. I'll do that for the next one. 91,000. And now I guess you could say we have this little level of something here where it's getting a little messy. Let's go down to the daily time frame. So on the daily time frame, I'll draw it a little bit like this. And it is super messy. And this is at 90,000 now. Let's take this out. So we're at 90,000 and 91,000. So clearly we have a level. We have two levels here that are strong. So we have to just see what price will ultimately react with. We could show some patterns here on the lower time frame. It already looks like we have. On the 4 hour, looks like we could have a triple top here. 1, 2, 3. Let's take a look. Not as nice, honestly. Not as great. But we are near the level. So we could see some type of bullish pattern setting up to maybe continue lower. Because on the daily, what do we see? Again, we had that break of structure where we were making highs, higher lows, and then we broke below here. So now that we broke below this level in 91, ultimately, remember, it's the price points that matter the most. So we broke back above here, and we're testing the level right next to it. So we might see a move lower. I will keep that in mind for when I mark up my charts today, because it is Sunday. Market's open in a couple hours, about 2 hours, 2.5 hours. Okay, let's pick a different pair. So we got our initial direction right for going lower right here. And then we had it initially going right for a move higher. And now we're in the current position where we don't know whether it's going to continue to show us that move higher to 95 and reject, or go or higher, or it could go lower now. Okay, so that was odd CAD. Let's do. Let's do. Let me see. Let's just look over at our list, huh? We could do stocks. Let's go to a stock. Or let's do Tesla. Good old Tesla. Okay, I already had some stuff drawn out. We'll delete those. Okay, let's go back in time. Oh. Oh, I see. Yeah, we'll go back in time. Replay mode. Let's go to right here. Go on the daily. Alright, here we are. Tesla in 2016. Let's see if we can catch our move. We know, alright, so we already know that Tesla went higher, but can we identify where it went higher? Using what we know, can we pick a beautiful point to buy without knowing anything after May 2016? So we're going to treat this exactly how it is. Yes, we know it went higher again, but let's be objective in what we look at, and let's see if we can catch a right time to buy using everything that we've learned. Okay, so we're on the daily time frame. Let's go to the weekly because we're looking at stocks long term. So we're on the weekly time frame. We're going to mark off 2016, January 4th when the market opened. I'm going to mark off 2017, and then 2018, and the rest are already, oh, they're not. I'm going to mark off 2019, and I'll do 15. All right. So what do we see here? Let me reset. Let's get a nice wide view. So we see Tesla got put public in 2010, or got listed. It's the NASDAQ most likely. Now we had a steady rise. It came in at about $1, right? Is that what it says? $1.28 is where it closed at. Opened at 127. Shot up high to $2 in 2010. And we just saw a slow but steady rise, slowly over the years. And then we took off in about 2013, where we went from, 2013, we went from about $2.20, and we shot up into 16. That's a very nice gain. That's at a 7x return in a year. Very nice, very nice. All right, 7x because we were at $2. We're ending the year at $14. 2 times 7 is 14. Right, or 14 divided by 2, whatever you want to say. So, and now that we saw this big pump, now we're kind of in this point where we're moving just a bit sideways. So let's see if we can find any patterns. And yeah, so we're on the weekly time frame. So first so we just determined that we were bullish. Higher high, higher low, higher high, higher low, higher high, equal low, lower high, lower low. Okay, so we could say we have a shift now. Now again, we had a very large move in a short period of time, within 1 year, I'll say, right? So now the market has to go into an exhaustion phase at some point because of such a large rally. So we could see a retracement. To what extent, we don't know. Ultimately, I would say it would be up to this point. If this does prove bullish, we can see price come down to this $8 mark, which would be an opportune time to buy, versus buying it at the top, somewhere the 16-18s, and then you're pretty much down 50% of your money for about a year or two before you see any growth on it. So let's draw ours. So we have one support here at $8. We're going to put one resistance up here. This was the highest point. Put that sideways. So you can see we have an M pattern forming right there. Double top. 1, 2. This is at about $19. Okay. I'll draw these out as well. Mark these up. 19 bones. Put 8 bones right there. Oops. So we got 8 bones, 19. And then we can say we have this support that formed in the middle because we had a W as well. Okay. And the W was at $12. So we have 3 major price points that we're in between. We have 12, 19, 8. If the market is bullish, we're looking at stocks, investing our money, you know, buy low, sell high, they say, right? Okay. So we've determined now that we are at a high. We're looking at it for our own eyes. We're not looking at media, headlines, random Robinhood or Cash App updates on your phone when everyone's going crazy talking about new highs and all this and that. We're looking at it with our own 2 eyes, and we're using our brain to paint the picture and determine when a logical point to invest your hard-earned money. What was I saying? Determining when you should invest your hard-earned money, right? Instead of just listening, going off Billy and Joe, right? So, in order to buy at a discount, we've determined that Tesla reached an all-time high of $19. Okay, or all-time high, yeah, $19.43 using our high val. I forget what those are called, our measure or whatever. $19.43 was the ultimate high in September of 2014. Here we are now in May of 2016, and we've been doing nothing but going between $12 and $19. This whole range is not a bad range to buy, but it could be better, right? Of course, we don't want to buy near the all-time high because usually after all-time highs it goes lower. Sometimes it'll continue going for another period, and then we'll see the retracement move. But as of right now, we'd like to see price come down to at least the $12 range before we start adding any of our money into it. You could add in a little bit here at this point, or a lot, because we can also, so we have the ultimate low down here, and we have this little move that happened also, where price ended the week and then it gapped higher and pushed up. So we have this little support here, and round that number to about $10. So we want to buy. If price continues bearish, we would like to buy at least 12, 10, ultimately 8 for the biggest bang. So let's see what we get. We get 1, 2, or 3. 3 scenarios. They're all going to take time. Let's see. And ultimately, price could also come back here and break lower. Or price could just stay in between the range, right? Of course. But looking for an investing point, since we're investing, we're only looking to buy. This is all we're going to look at or focus on. So let's just let it play. And let me zoom in a little bit. Price did not touch this $12 mark yet. Looking for a candle to come down here, close, give us a bullish candle, something like this. Price touched this range, this box, and we got a bullish candle. Okay. Oops. Okay, there we go. Price touched See how long it took for price just to touch $12? We spotted this in when? Spotted this in May of 2016. Price did not touch until November. Okay. Now we would go down to the daily. Well, we got the bullish candle, but we're going to add in the patterns. Going to the daily. Wow, I didn't make this up. We have a little W here. If we went down to a lower time frame, it'd look a little bit better. So we have a nice W. Clear W here. We saw it in the daily. December, holiday season. Hey, let's throw in some money. Let's start the next year off. All right, we're buying our first batch of shares. We're buying our first batch of shares. I just do this just for aesthetic. Just so we know we caught a buy here. Or what was I using actually? Sorry. I was using this little circle, right? There we go. So we caught our first purchase of shares here. Okay, we'll get rid of these. So now we bought 100 shares at $12, right? Let's say. Let's see if we continue higher now. Okay. So started off, ended the year strong, started the next year very strong. We bought in somewhere in this range in December at $12.30 or so. 70 days later, it's February. We're now back up to our $19 mark. And all we had to do is just wait. We just waited a couple months. And we put our money in, and week after week, straight profits on our money, just growth. We're up 53% on your money. 100 shares, let's say 100 shares at $12. Let me pull out the calculator. Oh, matter of fact, I could. And then I don't even know why I pulled this out. So we have an extra $6,000. So our $12,000 that we bought right here is now worth 18 grand in February. Now we can see we're showing some resistance, but we know we kind of expected this because 1, 2, and now 3. Okay, sign of a reversal, right? So have no fear. What would you do in this scenario? Would you sell everything and take a profit? Would you hold everything? Would you take some off the table? Now, hypothetically, obviously, yes, there's capital gains and stuff like that, but there's ways to get around that, neither here nor there. Hypothetically, at this point, you see this. You see that we got in here. Also, look at this candle. We have a evening star, right? Boom. Candle, doji star candle, long wick at the top, end of an uptrend, followed by a bearish candle. Little reminder. Excuse me. Up, down. Sounds a little ugly. But up, down, right? Up, down. Okay. Up, down. It's not as pretty, but you get it. Okay. So we see this and we wait for the following week for the bearish move. So now we're closing at about 17 bucks or so. $17.13, still in profit a lot compared to 12, right? So at this point, we got in somewhere down here, and now we're sitting right here to end the week at about 38%. So at this point, you're probably up around 4 grand on your 12,000, right? 12,000 plus 4 grand. I'm doing some my 16 grand right there. So at this point, you can take that 4 grand out and reward yourself for being a boss. So I'm gonna mark this right here. All right, upper here. So you can pull profits out and leave principal in. Pull profits out and leave principal in. So you can leave that 12 grand in, take out your 4, or you could pull half of your profits, because ultimately this is a long-term investment. Pull half of profits and leave rest in. Or you could take out everything and pull everything. 4 and 4, do nothing and hold. Now remember, we don't know. This is real time. We don't know how Tesla's gonna do. We got skepticism. Is it just a fad? Whoop-de-doop-de-doo. We don't know what Tesla's up to. They're teasing about their cars. I think their cars were just released somewhere in this time, right? Somewhere in this, they had some hype for themselves right around this time. They're teasing about the cars, so maybe that'll keep us in. Maybe it'll keep us out. But ultimately, what is the goal of your account? What is the goal of your investments? This will determine what you do in these scenarios, right? If you're going off emotion, like majority of people who invest their money, and doesn't manage it themselves, they're gonna take everything out. Oh, or they're gonna hold. So you know what's gonna happen first is the greed's gonna be here, and people will most likely want to hold for more. Then the market's gonna come all the way back down, if it does, and then they're gonna pull everything out for the same if they're lucky. If not, they're gonna pull it all out when they're below and they're in the negative. That $12,000 investment that was in right here is worth 6 grand. They're gonna pull it out and take that loss, and then price is gonna reverse higher. The whole point of why we're doing this and we're studying these videos is to approach everything logically and make some fucking money, right? So you choose what you want to do in the scenario. What I would probably do is, again, but this goes with the goal of your account. So let's just say we're just long-term investing. We want to catch what we know today and price being up there. At this point, let's see. We're going to make this realistic as possible. So I'm coming off the top of my head. Apologies for the, back and forth. So this is December. Keeping it real, a lot of people just blew their bank accounts credit for presents. So just off of that, if you're not in the position where you could just afford to get the whole family, everyone gifts and stuff like that, your family has a great time, parties, all that stuff. You know what? I think I would recoup some of that back, right? So let's say we spent 3-4 grand on presents, maybe some baby showers, some birthdays, some dinners, whatever. It's February right now. Holiday season, we're fresh out of holiday season. The Super Bowl just happened. So we got 80 days from December. We had Black Friday shopping, Thanksgiving, Christmas, obviously, Super Bowl. You know what? I'm going to pull half of the profits out and leave the rest in. So take 2 grand out here, put that back into your pockets, treat yourself, put it back into your account so you can get some money back. It's hands-free money, right? This is that passive income people talk about. This is it. You got to bless yourself. Before you get to the $20,000 withdrawals or $20,000 gains, $200,000 gains, you got to reward yourself with the $200 gain, the $2,000 profit. Even if it's $20, get yourself some Chipotle, get yourself lunch that day, pay your gas. You didn't have to work for it actively. You didn't have to use your active income. It's passive, right? It's the slow steps. So I would pull some money out here and leave the rest in and just let everything else compound. So I'm pulling some of my money out. Let's see where this market continues to go. So at this point, it could either retest and go higher and break above $19, or it could float in between, do something like this again, come back down. If it comes back down here, I'd put more money in again and see if we can catch a move higher. And if it comes back up and makes another pattern, gives another rejection, I already took my money out. I'm not touching it again. This is a long-term investment, right? So let's just wait and see. And 4 weeks later, we break higher. So it took one. So let me get the little measuring tool out. So this is the week of February 21st of 2017. We broke above. 40 days later, April 3rd. So 40 days later, we're now above. Your initial investment, if you chose to do nothing, your initial investment is now, we stopped it over here, but you're now up 62%, 74% on your money. $7,400 added to, wait, hold on, 74%, I'm bugging. 12,000. Yeah, $8,800 gain, almost $8,900. So you're floating at about 20 grand, just about. You're at 20 grand now in 6 months, under 6 months. September 5th to May 5th, May 8th. 12 grand into 20 grand in 5, 6 months. Y'all, we're doing this together. We're doing this together live. Like, I didn't study this chart yesterday or last night or whenever. I literally worked, went to sleep, woke up, did what I had to do, came downstairs, hopped on, and started recording. And we're getting right to it. We're putting together everything that we've just learned in this course. I'm going to delete down here because I don't think we'll be seeing these levels. So we have a 1, a 2, if we're looking back now, right? We had this go below, come back above, retested, $12. We put our money in here, we took off. We took out, I chose to take out $2,000 worth of profit out of 4,000 at this point because it was at 38% profit. It reached 50%, came down to 38%. Took out a little bit to pay myself back for all the Christmas giving I did, and we're leaving the rest in to grow. 4 or 5 weeks later, it's growing. In order for price to break above the new high, there must have been an announcement, right? Remember, fundamentals. So either Elon released something, Tesla just came out with a new model. It had to be something beneficial. They're ahead of their dividends, maybe the highest dividends they've ever given back. Something super positive would create price to open up and blow above, and it would have happened over this weekend where this gap was, right? So the week ending of March 27th into April, something had occurred, was announced, and we broke above $19. At this point now, you're just riding the wave. We don't know how long, how we don't. Let's just play it. I'll explain as we go. So we don't know how long this is going to take before it comes back down. If it does come down, we're going to look to buy it at $19. Okay, we got a little close, but you wanted to. I'm not really convinced. It was just shy. Let me zoom in a little bit. Right? It was just shy of touching our lowest zone at 19. We reached a low of 1950. That's cool and all. It was just a wick though. I'm not convinced. I want to see a candle touch. I want to see a body come into here, into this level. I want to see a candle close in here and give us that bullish candle for the following week. Right? We're going to approach this smart. Over here, it actually did test a little bit and the candle wicked into it. But again, I want a body. Same way like this. I want a body in here followed by a bullish week. Confirm to us that we're moving on, that we might be moving on. Might. Probabilities. Okay, I think we're gonna touch. Okay, there we go. So it was playing a little bit of games. Price broke above. So see what we just avoided? It was kind of minor. But a lot of people see at this point right here is where the news starts to go crazy. Right? Now we're seeing highs of $25, $26. Let me see. 25.80. Yeah, let me put 26. Oops. We're seeing highs of $26 now. Just last year, not even just last year, we just doubled price in 6 months, 7 months. November to July, we just went from $12 to $26. The news is going stupid right now, y'all. We know this. We've all seen this. We got CNN probably talking about it. All you see on Instagram, Twitter, maybe Facebook, you got, your guys at your local restaurants, local bars, your townies. Word is starting to spread a little bit. Grandparents, grandkids, whoop-de-doop-de-doo. Tesla's the new talk for the next little bit. People are going to start putting all their money in right now. In this whole range right here is where people are putting in their money. Usually it's going to be right here. Whoops. Let me use this. Usually it's going to be at these points where, in these ranges here, like in this week, because remember these are all weeks, so it's announced on like a Tuesday that price pulled up. Wednesday, Thursday, Friday's payday. Thursday for some people. People are gonna start putting in some money in, and then you have woof 1, 2, followed by 2 bearish weeks off rip. Saw 26. Now we close the next week down at 20. Not bad still because it's only $6, right? Price comes back up. People are putting in their money some more. Anywhere in this range, people are just flooding their money in because some people are late to the show, late to the news. They're putting their money in. Whoosh, another bearish. What does this look like to y'all? On the daily time frame, this is an M right here. It's a little tight on the weekly. Let's go to the daily real quick. Boom. We're like, hold on. Us. Now this is us. We're like, hold on a second. Okay, all-time highs. Let's go check out the chart. Let's see what's really going on. Boom. All we had to do was just go from the weekly to the daily. All we had to do is just go look at this. We open that up. We see this. Hold on. Let's go down the time frame. See this a little bit more clear. Oh, a double top just formed. Yeah, I'm not putting my money into this shit. I'm not putting my money in. And this is if you didn't put your money in here. But even if we did, we're like, I'm not putting any money. We already know what we want to do. We're waiting. We're waiting for a great price. We're telling our brothers, cousins, everyone not to put their money in, but they're going to do it anyways. Because what do we know? We just study this shit. We just know what we're talking about a little bit. So cool. So we wanted price to come down here into 19 before we invested any more money. Price closed below here, which was great. We just avoided a potential bad position, right? Bad situation of losing some money. Following week, price opens below, opens below, finishes bullish above. Cool. That's a better sign, but we're gonna need one. I would wait for one more candle to give us what we want again. I want a candle to close here, followed by a bearish move. This is indecision to me. This is a doji to me. We close below, then we close above. What are we doing? Are we just going to get messy in this zone and break a little lower? Are we going to get messy and break higher? We're already in the position. We already have our money in, so either way, we're winning, right? If it goes lower, we're going to find a position to buy and catch it up. If it goes higher, we're already in. We're going to make more money, right? We're positioned in a win-win, right? So let's just wait and see. Okay. The next week after this, we had indecision. We had a doji. We're kind of forming a little downtrend here. As we can see, we had a high, double top. I don't really want to say this is like maybe on the daily this would be like a lower low, lower high. But I would say I would just wait. This should just be a little slide. Let's just wait. So I'll press the next one. Okay. Hold on. It's to finish. All right. So boom, 1, 2, 3 weeks later, we get the body close, and then we get Remember what candle this is? We get a little hammer. Get a little hammer. Look how cute it looks. Right? Let me write this in. Oops. We get a little hammer, y'all. Boom. Little hammer to the T. To the T. Look at it. Can't make this shit up. So at this point, and then we get for the following week, then we get a doji again. So we're getting signs that we want to go bullish, signs that we don't know if we're really gonna go bullish. It's kind of risky, but we have a little bit of market direction on our side that we are overall bullish. This could right here be a lower high forming, right? Because we didn't really get one yet. This is all one move. I'm not counting this as a lower high. This is still all one because it's only like 2 weeks. Like we want to see a lower high be like something like this, like an actual a progressive move, solidified boom, right? Not just like 1, 2, 3 boom. Like these are just minor moves. We want large ones, right? So overall, we're bullish. We have one, and now it looks like we're just caught in this little retracement. That we're just gonna maybe continue going higher, and then we have this here, baby, and then we might see something like this, right? Something like that. Maybe messier. Who knows? This might be a low point, our higher low. We don't know, and we're not looking to call those. That's where people get shot and shoot themselves in the foot trying to call tops and bottoms. You know what it's called when you try to catch a bottom in a falling market? You're what's it called? You're catching knives. You're trying to catch a knife, right? Yeah, it's something like that. It's called falling knives or something like that. You know, you don't try and catch a knife coming down. That's how you get got. So we're just aware. We're just putting the piece together, right? We're just trying to paint the picture, make it make sense objectively. Again, we're looking back on this, so we don't know what any Tesla rumors are going on. We don't know any announcements that might be going on, any hearsay or talk going around, anything like that. We don't know. We're just looking purely technicals. We don't know what the earnings are. Can you even click on these? All right, so you can't click on these. So the earnings over here was negative. So reported was 3.29, estimate was 3.3. They took minus 8 million in revenue. They took a loss. Surprise. So earnings came out. This can explain why we took a little dip. Earnings came out, and that's probably why the market started to trend a little bearish. Okay. Now we have the next earnings report coming out. What is it, April 30th? So this week actually. May 2nd, we got a little bit positive. So revenue reported 3.4 billion, estimate was 3.26, surprise was 144 million in total revenue. So what was reported was over the estimate, which is positive. I think I don't understand surprise that much, but I think it's just like total, like overall. So up 4% on revenue, and the earnings was just a tad better as well at 6%. So the shareholders are happy, the stockholders are happy. We're happy. Looks like we have a little bit of good news to go into the next quarter. Remember, January, February, March, quarter one, April, May, June, quarter two. Starting April, mid quarter two, this might take us into a better stride. So I'm gonna say we're gonna put some money in. Boom, give me another 100 shares. $19. Let's see. Or 1,000 shares. Okay, put our money in. We get to see a little bit of positives, and then we see this start to happen. Bum bum bum. Daily time frame. We see another M forming. Almost at the 26 level. and we're capping out at about 25 on the daily. Oof, looks like we just we got ourselves got. But again, we put in, we're we put in our new position of another 1,000 shares at 1,900. However, we're still in profit from our original investment 2 years, a year and a half ago, right? Ultimately, we're up 100%. So this 12 grand went up to 30 grand at this point. You're up 108% on your money. So we're touching about 30 grand. You put in 12, in November, December, and in June you're up double on your money. We took out a little bit of profit here, so let's just call it 28K. Okay. We see this form. We're still in. We buy some more. Even though we're buying more at a more expensive price, we have our profits over here kind of acting as a hedge against that. So even if we buy here and this is showing bearish signs, even if it goes lower, we're still covered. We're still covered all through here because we bought down here initially. So anything above this week, above this $13, $14 mark, we're in profit still. So the losses here that are floating, unrealized losses, let me say that again, unrealized losses. You don't lose until you take your money out or that shit hits zero. All right? You will be fine. You have one winning position and you got a scale in right here. Do not freak out because you have profit. You took some out to treat yourself. You could have taken more out up here. I didn't even think about that, or I think we talked about it. You could take it and you could take more out over here if you wanted at any point. But we're in this for the long ride, the long haul. We know markets are gonna fluctuate and go up and down. But as long as we're on the right side, more times than we are on the wrong side, it'll be okay. So they bought in some more. Bought in some more shares. 19 grand. We're loading up our train. And let's see. Let us see. Let's see what happens. Yeah. Okay. It's a little messy. Super messy right here at this $19 mark. At this point, the support that we have, support and resistance, is 4 years old now, right? So this $19 mark that seems so significant up to 2017, maybe it's starting not to be as significant. It was a strong point. We bought in our money here, but now we can see that we're going down, above, below, above, below. Like it's super, super messy. We could see a new support forming at $17. Kind of see a W here. Right, so I'm gonna just mark this right here like a W, like that. And we put in our money here. I'm gonna leave this up. You know, I'm gonna leave it up. Yeah, I'm gonna leave it like this. I'm gonna leave it like this just so we can say that we had our support and we bought some more shares here. I'm gonna drag $26 over because that's our ultimate. I'm gonna get rid of that because we're really analyzing off the weekly. This is long term. Okay, I'm gonna turn this red, show this is invalidated. And this is our new level of concern. Or not even concern, not in a negative way, it's our new level of support. So if price were to come back down here, we could buy even more shares. If it gives us what we want to see at 16, 17. Now we're dollar cost averaging our second position here. At 19, we're going to buy more at a little bit of a better price and catch that move higher, right? Now let's see what happens here. Can we break 26 or what? 26 is our ultimate, and then we're kind of respecting 25 as well. Let's see. Okay, in between, 19, we're still touching 19. All right. All right, so we have a triple bottom here. Price didn't close in the zone like I would prefer, which is okay. This is a pretty strong engulfing candle. So yeah, the wick into it opened up to start the week. Remember we looked at our our earnings was over here, so that's irrelevant. We started strong, no wick on top, and let me get rid of $19. Get rid of that. Our new level of concern is 17, or area of interest. I could say price of interest, whatever you want to call it. $17. Um, we have a triple bottom here. You know, as much as I would want to buy in right here, we're at $18 and we already bought in at 19. So it pretty much kind of you'd be doubling your risk because it's not like we're buying it at a lower price where we could kind of have a reason of like, okay, we're buying it lower, so when it ultimately goes higher, it'd be a bigger profit. We're kind of buying it at the same price. I mean, $18.50 compared to $19.60. It's $1 difference. I'm not putting my money in here. I would wait. I would wait for it to get what we want, like a candle to come into this zone, and then show us that we're going up for at least this $2 or $3 difference, at least. So let's just wait and see. So our investment's safe at our initial price. All right. Good thing we didn't, because we would have been in a bigger loss, unrealized loss. Remember, we're protecting our money. We're putting it in when it makes sense. Now we broke below. Waited 3 more weeks, 4 weeks, and we broke below mid-April. So now, let's just now we're just really just waiting to see. We're just waiting for the market to show us something. And we start to see a little sell-off here. We touched $12. We haven't seen $12 since November 2016. So now we took some money off the top. We left our money in up here from our first one, or you could have taken some more out. Same for scenario. Take everything. Go take everything. Also, you can pull your money out of here and put it into a different. Leave it in your like. Let's say you have an E-Trade or Robinhood. You could leave it in there, and then move it into a different stock that could be possibly doing better. You know, that's what these really wealthy people do. They move their money around and hedge it. So yeah, we're focused on Tesla, but there's a lot more things than I'm really just covering what we're learning. But you really could, you see this, you see these rejections, you could pull all your money out, you could have taken some out. You're in it for the long term, so of course you're probably gonna leave in your initial investment, which we're at now, and this one's down a bit. So this one would be down 20. You'd be down, let's say we went touchdown right here, 37%, 40%, 30%. So 30-40% off of that initial investment. So let's say if it was at $19, you buy 1,000 shares, 19 grand. 30% of that would probably be about 5 to 6 grand. Yeah, it'd probably be somewhere around 5 grand. So 19, you're down like 14, 13,000. And then you have this one up at about 12, back down to 12 or so. Or maybe a little less because you took some, because I chose to take like some profit out. I took some profit out. Yeah, so we're back down here. We're revisiting 12. Now this was one of our levels. I would put money back in here, because this is initially what we wanted when we got to right here. Wait for it to retrace or something weird. So we were saying. So I'm putting in money over here somewhere in this week, or at the end of the week, you could say. I'm putting money in somewhere in this range. You could just say that. It could be like a Tuesday, Wednesday, whatever. Boom, another 1,000 shares right there. Just for the simple fact that it's a double bottom now. We revisited this level, It's where we bought it originally. 3 years later, back at 12, putting my money in just because of that reason. Let's see. Okay, respected 17. Are we gonna break it? Are we gonna keep respecting? Broke higher. Okay. Alright, at this point, so this is how you fucking do it, guys. This is how we do it. I'm telling you, don't panic, don't get emotional, just be objective. First investment, took some profit, all-time high of $26. We kind of in this weird range of where we didn't know if we're gonna be bullish or bearish enough for the next following one for the next 2 years. 666 days over here, so almost the next 2 years. We're kind of in between $26 and $17, not knowing where this is going. Well, we kind of had an idea because we're actually looking at it, drawing it out, painting the picture, letting the evidence present itself. Took another position here at $19. Went into a little bit of profit, ultimately went lower. We went down 30-40%. So we're in an unrealized loss of about 5-6 grand on our 19 grand. And we put in another big batch at 12, which was our previous buy point, which hasn't been seen in 2.5 years. 2.5 years. Put in another big batch. You can even put in 2,000 shares at this point on. Put all the chips in the middle, because you still have this position riding. So now at this point, if this shit takes off, you're in a triple threat move. You can buy your ass 2 new cars in about in a few years. This shit just has to double. Damn near. Not even. It's already doubled now. Look at this. Before the year ended, so we put in our next position in June. Christmas season, you want to check your you want to give it a check your account. You're up 80% on what you just did right there. Like, this is not no fairy tales. I'm not inflating any numbers. I'm not gassing up any numbers. You can make them small. I'm putting 1,000 shares just because it's more exciting with larger numbers, But you can just do 100 shares and still, like, your money's growing like rapidly at the right points too. Passively at that. The money goes double, triple. Take out a little bit, save it for yourself, put it into your account, leave the principal in. Leave the majority of your stuff in. Let that shit keep growing. Alright, so put it in here. We put it in there. And let's see. And we put it in here. Play. My, oh my. Oh me, oh my. This shit's out of here. It's out of here, y'all. It's out of here. It's out of here. I don't think we'll ever see $26 again. I don't think we ever did. 3. Oh man. Prime times. I'm so happy right now. Not even happy that I'm right, but I'm happy that I'm not even happy that I'm right, because if it went wrong, then we could discuss it. But the fact that it's playing out how we look at it shows you like what we just learned. Like, this is like, it's bread and butter. Every single time it's bread and butter. The hardest part about these financial markets is people and their emotions, our psychology, our human nature goes against us when we're trying to be profitable in this type of industry. That's why casinos are huge and gambling is huge and people have addictions, because the excitement that we feel when our money's up, but then also that excitement turns to greed because we want more of it, and then we lose it and it screws us. Our human nature does not for lack of a better word, collaborate well with financial decisions like this, especially when we have real life bills, real life responsibilities. It's insane. But if over time you can train yourself to be a robot when it comes to this, you want to get yourself to the point where your heart doesn't, when your heart isn't racing, when you see you're in profit a lot of money, or when you're, in drawdown or in the negative, in the red, a lot of money. You want to be able to look at it take a breath, say okay, and come back to it. Now, we did this pretty fast, but this is weeks at a time in between, sometimes a year between all of our examples of when we're investing our money and making decisions. You put in your money here. It took 60 days before we decided to do anything about it. 85 days, we took out a little bit of profit. After that, we didn't do anything for, after that 80 days, in January or February 2017, we didn't take any money out. Hypothetically, we didn't talk about it, or even if I did, I forgot already. But we didn't make another decision until over a year later. Over a year later, we didn't make another decision. And that's on this singular stock, but imagine you do this for 10, right? So you're in a loss on like 3 or 4, you're in major gains across another 8. Like, this is how it works. We're just focused on this one. So 426 days later is when we decided to buy more shares. A whole year. We're not following the news. We're keeping any rumors and stuff in the back of our mind, but it's not making us move. Just on some rumors. Right? Boom. So we put in some more money here. We don't do anything else for another year. Our second investment is down 37%. Our 19 grand is down to like 14. And we just we don't give a shit. This is a long-term hold because we believe in Tesla. Obviously, we're putting our money into it. At 2017, the Teslas were out. They were looking cool. All the talks about EVs were coming. Teslas were fast. It's the new thing. Whoop-de-doop-de-doo. Cool. I put in a big chunk of money here at $12 again because that's what we did 3 years before. 12 grand times 2 is 24. We're at 105%. So 12 grand to 24,000. Took 2,000 out for profit. Let's say we're floating 20,000 on this position. All right. So I'm gonna just put 20,000 right here. 20K. All right, 20K right there. So this whole thing is 20K. This one right here to the breakout is 36%. That was 19 grand. 1,000 shares at $19, $19,000. 19 times 33.33 is 6,200. 6,200 plus 19 grand. Oh, whoops. 6,270 plus 19 is 25. Okay. This one's 25. Overall, this is just all overall. So 25 grand now at this point. And then this one is, did we do double at this point? Is that what I said? Because we have some profit floating. Let's just do regular. We'll just do another 1,000 shares at 12 grand. Okay, so this is going to be 12. This is going to be another 20 ball. 20K again, right? Same place. I'm just gonna keep it simple like that. Same place, same time, or different time. So, as of this point here, 20K, 20K, 25K. That's 20, 40, 65,000, not 80. So we're floating at about 60. Our one Tesla stock position over the last 3 years, at this point, is floating at 60 grand. 65K, give or take. $65K. And that is again, we're basing off our first investment. And this is where it's at 116%. All right, this is how we do it. Now, look at this shit. 2021. Or where's, so yeah, we're going, hold on. January 6th. January 4th. Alright. So to end the year, so to end the year, put in your third, so your third investment. End of the year, you're up. You look at your whole account on Tesla. Shit shows 116% profit total, 65 grand. It'll be a little bit more because it's counting this one too, plus 30% for this one. So, okay, initial investment, 12K, 12K, 19K, that equals 43. 12 is 24 plus 19, $43,000. Yeah, what I should have done is just total investment 12K plus 19K plus 12K again. Okay. Over how many years? Oh. 4 years. This is it right here. Double check my work. Make sure. I just did this like pretty quick. I just had my little calculator open. I did it wrong right here because I had subtracted the 116 from the gain and did some. I came up with like 9 million. I'm like, that's not right. There's no way. That doesn't make sense. This is a more accurate number. You know, it's give or take a couple grand, obviously, because of the technicalities of the second position being up only a little bit versus these ones, and you went in higher. But yeah, I mean, initial investment November 28th, took out a little bit of money here, put in a second one, put in our third investment, and then price shot up since then. From our initial point, price reached a high of 700%. 800%. 800. It reached a high of 800. A high of 800%. But we'll just leave it at 700 because you get the picture. 300,000 over 4 years. This is untouched. This is you not even working. You're not actively clocking in to do this. This is literally you just being educated and putting in your money when it makes sense. Once a year, if it meets the criteria of what you know, you'll make a move.